All right, let's tackle a real head scratcher in the tech world today, Qualcomm. So, is this thing a classic value trap? An investment that looks cheap but is actually just broken? Or is it a sleeping giant, totally mispriced by a market that's just plain nervous? We're going to dig deep into the numbers from 2020 through 2025 and see if we can figure it out.
And this is really the heart of the matter, isn't it? I mean, how can a company that's so central to the entire mobile revolution be struggling so much when the rest of the tech world is just flying high? On the surface, it doesn't add up.
Just look at this disconnect right here. You've got the Nasdaq, the big tech index, up nearly 18%. And at the very same time, Qualcomm is down almost 19%. This isn't just a little dip, folks. This is a massive divergence. So that gap, that 36% performance gap, that's our mystery. And a gap this big really only means one of two things. Either the business is just fundamentally broken, or the market is missing something huge. Okay, so let's start our investigation. And where do you always start? You look at the most obvious culprit, the thing every single investor sees first, the company's revenue. This is where the story of fear really begins. And this chart right here, this perfectly explains why everyone's so nervous. You see that massive peak back in 2022, over $44 billion, but then, bam, a really sharp drop in 2023. So the market looks at this, it sees this up and down cycle, and it gets spooked. But, and this is key, look at what's projected for 2025, a full-blown recovery, right back to that peak.
Okay, so this is where our investigation takes a pretty interesting turn. That revenue story, that explains the fear. We get it. But what if that's not the whole picture? What if the stock price is just reacting to the wrong thing?
Let's pop the hood. Let's look right past that jumpy revenue number and see what's really going on with the company's financial health. We're going to check out the engine itself.
And boom, here it is, our first big clue. Even with that huge revenue drop we just talked about, look at the company's gross margin. It's super resilient. It's staying above a 55% floor. And what that tells you is that their core ability to make money, their pricing power, it's all still there. It's totally intact, even in a rough year.
And this chart right here, this is the hero of our story, free cash flow. While the stock price was busy falling, the company's actual cash engine was speeding up. I mean, check this out. It's on track to nearly triple from where it was in 2020, hitting a record high of almost $13 billion in 2025. This is the cash machine the market seems to be completely ignoring.
So how do they protect this incredible cash machine? Well, they build a giant moat around it. We're talking about spending close to $9 billion every single year on research and development. That kind of aggressive investment, that's over 20% of their revenue, and it just creates this huge wall that competitors can't easily climb over.
Okay, so we found this hidden cash machine, and it's got a strong moat protecting it. But what's the motive? What is management actually doing with all that cash? Because really, for an investor, that's the only question that matters.
Well, part one of the answer is the dividend. They're giving the cash to you, the shareholder. Look at this. They are consistently paying out more and more cash directly to shareholders. It's grown from under $3 billion to a projected $3.8 billion. And here's the kicker. That dividend, that growing dividend, it is super safe. It's using up less than 30% of their free cash flow. That means they have a ton of wiggle room to get through tough times, or even, raise it even more in the future.
All right, part two of how they're giving you value, share buybacks. They are constantly in the market buying back their own stock, which, as you can see from this line here, just steadily reduces the total number of shares out there. And the source material had a really great way of explaining this. Think of it like a pizza pie. By buying back shares, the company is basically making sure that the whole pie of future profits is split into fewer but much bigger slices for everyone who still owns a piece. It's an automatic way to make your slice more valuable. So you add up the dividends and these buybacks, and the number is just, wow, it's staggering. We're talking over $12 billion going back to shareholders in 2025. That is 95% of all the free cash they're making. It doesn't get much clearer than that. This management team is all in on shareholder value.
All right, we've laid out all the evidence, we've seen why the market is scared, but we've also uncovered some pretty powerful hidden strengths. So it's time. Let's weigh it all and come to a verdict. First things first, let's talk about safety. The company's balance sheet is basically a fortress. They're sitting on over $12 billion in cash. Now, yeah, they have about $15 billion in debt, but get this, their interest payments eat up only 5% of their cash flow. The risk of them getting into any real financial trouble is just incredibly low. Okay, what about the price? The valuation? A few years ago, back in 2020, things were kind of crazy, right? People were paying over 21 times the company's book value. Well, that has completely cooled off. Today, it's under 9x. All that speculative hype, it's gone. What's left is a price that seems to be based on actual fundamentals, not just euphoria.
So let's put it all on the table. The case against Qualcomm, the bear case, it's pretty simple, right? It's a cyclical business, and the stock has been a real dog lately. But the bull case? Man, it feels a lot stronger. You've got record free cash flow, a huge commitment to returning that cash to shareholders, a valuation that's come way down to earth, and that massive R&D moat protecting the whole thing. And that brings us to the final verdict, based on everything we've looked at from the source material. You have this wild split screen happening. The stock price has been terrible, underperforming the market, but at the exact same time, its ability to generate cash has been incredible. And whenever you see that kind of divergence, a falling price next to a rising cash flow, it screams classic value setup. So the conclusion here is pretty clear. It's a sleeping giant. And that really leaves us with a big question, the one you have to ask yourself. All the data we've seen points to a huge recovery, to record cash generation coming in 2025. The evidence really suggests the value is there, hiding in plain sight. So the real question isn't about the company, it's about patience. Are you willing to wait for the rest of the market to finally wake up and see what's going on?